Well, Canadian home sales were a little changed in November, falling 0.6% month over month, according to new data from the Canadian Real Estate Association. Sales remain well above spring levels, but have largely stalled since July as buyers and sellers wait for greater economic and rate certainty. Prices also ticked lower, with the National Home Price Index down 0.4% from October and nearly 4% from a year ago. Joining us now to break down the numbers is Peter Norman, Vice President and Economic Strategist at Altus Group. And Peter, thanks very much for joining us.
My pleasure, Roger. Thanks very much for having me.
What number caught your eye the most out of all these?
Well, I think the thing that we're focused on right now is the fact that in November we tipped into negative territory on a year-over-year basis. So that's something I think that we want to stay cognizant of. We're generally feeling like the economy is picking up right now, that 2026 is going to be a stronger environment going forward. And yet these numbers are kind of pointing to a negative year-over-year number, which was a little bit surprising.
What's making you think it'll be a stronger year next year?
Well, I think that we've got some positive momentum on employment numbers more recently. I think it's pretty clear right now from GDP numbers that there's a little bit of positive momentum going into 2026 as well. I think the housing market has a fair amount of pent-up demand over the last 2 to 3 years as we've gone through this interest rate cycle that's ready to take advantage of the increased affordability, which has been built into the market now that we've had some price adjustment. I think all of those are positive factors going into 2026. We continue to have some headwinds, though, of course, slower population growth perhaps being the number one amongst those. And there is continued kind of economic uncertainty with respect to, the trade dispute and so on and so forth as well.
And with the Bank of Canada, with the rate, looks like it's probably going to be unchanged, and doesn't sound like at all like there will be a cut of any kind. How much is that weighing with people? Are they now at that point where they go, we have to make a move if we're looking for a house?
Yeah, that may well be. I mean, I agree with you that we're probably at a kind of a neutral state right now. I don't think the bank's going to be in a hurry to do any more cutting or raising in the announcements ahead. Probably even all the way through 2026. And this is of course important as well, because while you're in a cutting cycle, some potential home buyers stay on the sidelines waiting to see when it bottoms out. But I will say that probably hasn't been a big factor through 2025. The interest rate outlook for the Bank of Canada has always been it's pretty much bottomed out, or it might cut one or two more times. And of course, that's how it played out through 2025. But these minor cuts are not the make or break decisions for a lot of home buyers. So I think a lot of home buyers came back into the market in 2025, those who are at least interest rate sensitive. But I will mention that the Bank of Canada is only one indicator for interest rate trends. The longer bond yields, the ones that really populate and inform the mortgage rates, the longer mortgage rates that home buyers are buying, as you know, they haven't really moved through this whole over the last 12 months or so, and so we continue to have some headwinds from the 5-year mortgage rate.
Is this a kind of can we call it a balanced housing market then right now, or is it tilting one way or the other?
This, Roger, this is very much a balanced housing market. We started off this call, talking about some minor year-over-year declines. If we had had this call 2 months ago, we would have been talking about some, minor year-over-year increases. And I suspect if we have this call in the next, number of months ahead, we're going to be talking about either one or the other. One of the issues that you have when you have a kind of a stable, balanced market is that you're going to have some numbers that look mildly positive or mildly negative as they get released, because really it's just been steady. I mean, on a seasonally adjusted basis, the Canadian Real Estate Association told us that monthly sales have been more or less 40,000 units each and every month for the last 5 or 6 months. And so that's the definition of very stable market. We have had, of course, as you may know, pretty significant price adjustments since the pricing peak about 18 to 24 months ago. and there continues to be some price adjustments in parts of the country, particularly Ontario and BC, that I think are probably going to play out over the next few months. But beyond that, we're in a very stable price environment for housing and a very stable transaction environment right now. This, of course, is all just talking to the resale housing market. Mm-hmm. Conditions on new home sales, very much different.
And what's concern? Is it concerning, those numbers?
Yeah, I mean, Altus Group, we track new home sales in major markets across the country. They continue to be very, very weak, and particularly the high-rise condo sales number. I mean, in Toronto, those numbers are down, about 50% from last year, but they're down about 90% from the peak. And that's a pretty similar story in major markets like Vancouver and Calgary and Montreal and elsewhere. Across the board, we're seeing that even though there continues to be this stability and this confidence in the resale market by potential home buyers, that really buyers are not going out to sales centers and buying pre-construction condos at the moment. And that continues to be something we watch very closely.
Okay, we're going to have to wrap it up there, but Peter, thanks as always for joining us.
Okay, my pleasure. Thank you.
Peter Norman, Vice President and Economic Strategist at the Altus Group.